So the interest rates are hot right now. Does it make sense for you to refinance? Well, today's discussion is going to talk about everything you need to know about refinancing, as I have personally just went through the discussions with a mortgage lender to see if it makes sense for myself, and I will pass along that information. For those that are returning, thank you. For those that are new, welcome to Frank Finance, where you can get your honest financial information and your questions answered. Alright, so as done in previous videos, I'm going to walk through the numbers and the cold hard facts of refinancing and what you need to consider and does it make sense. Alright, so what you see in front of you here is an Excel document to walk through a couple different analysis. So the first one we're going to talk through is original loan versus a refinance, keeping the terms the same. So 30-year in the original loan, 30-year in the refinance. And how does the interest rate change your net worth? The second thing we'll talk about is what if you were to refinance to the new rate? It obviously reduces your payment, but now let's say you're comfortable with your payment today and you want to apply that extra payment towards the mortgage. What does that mean? And then we'll use another example where we talk about what if we were to change to a different term. So in this example, I'm going to do a 10-year term. And then finally, if I'm comfortable with the 10-year term, what if I were to actually take the difference between the 10-year term value against what I have in the very first column of the original loan and then say, let's add that to incremental payments and not refinance at all and see what is the actual net worth of all of these decisions. Before we start, as always, if you enjoy the content, please like, subscribe, and comment below. The document that you see here is actually available for you in the Discord link below in hashtag finance files. So feel free to go out and actually snag this to yourself and customize it for you. And I have it in a good position for you to customize as well. So let's start right with it here, starting with the original loan. Okay, so for instance, this house is worth $225,000. The loan value after they put down payments on it netted them at, call it $185,000. The interest rate was 3.8%, meaning that over the course of 30 years they pay $128,000 in interest. The monthly payment is $869. And then as I go down to the bottom here, so for instance, if you were to think of the net worth analysis, which we're going to compare as we go through this entire analysis here, the house value is again $225,000. When you're thinking about where are you at today in your mortgage, there is sunk interest in it, meaning that you've already paid, call it 5 years of a mortgage. The interest on that part is gone. You can't bring it back. So we have to remember that there's sunk interest that can't be recovered basically, or it is not an opportunity to remove it. And then so the interest remaining is $100,000. This house right now, or the investment on this property, if you take the value of the house less the sunk interest, less the interest remaining, you would get a net worth of roughly underneath $100,000. So this is our baseline. This baseline is unique to everyone. Whether you have a $500,000 house or a $100,000 house, it doesn't matter. And this needs to be customized to yourself. So use this example because this is what I went through myself to think through, should I refinance? And so this isn't me just making up numbers. This is physically me going through this analysis myself. And I wanted to, shed light on this because I wasn't aware of this when I first went through this process and what I should know. Starting in the blues, so everything in the blue columns basically are going to be referencing a change to the original plan. Everything in the yellow is going to be better or worse, assuming better meaning lower interest, better meaning lower payments, and better meaning a higher net worth. Worse, obviously the opposite direction. So if I were to refinance the mortgage for 30 years, there would be $170,000 left on the mortgage. The interest rate would be 2.7, which is roughly 1% lower. The interest payments would be $78,000 on the new mortgage, and the new payments would be $690. Again, no extra payments. We're just comparing apples to apples. The cost to refinance is about $2,700, and the one thing I'm not going to keep in this analysis or talk through is the escrow. So if you escrow like I do myself, it's including your insurance on the house, it's including taxes, so basically everything outside of the monthly payment, and they keep a balance out there of, call it, 2 months worth of costs. That will change potentially But for the most part, it's a wash. So I don't want to use that in this analysis to weigh down the actual point we're trying to make. And so when you get the cost of a refinance, I'll give you an example of a refinance document. This is literally from my mortgage lender right here. So this is section 3 of the refinance where it talks about how much it's going to cost to refinance it at $2,700 and what makes up that rate. All right, so jumping back, so that's how I got the refinance rate, and I'm going to use that consistently across the board at just shy of 2,700. Now, if I look at the net worth analysis, it's you have the same house, 225,000, sunk interest, can't get that back at 28,000. The new interest on the refinance is 78,000, but then you also have to pay out that extra 2,700 in refinancing for a net worth gain of $19,000. So if you were to say that I'm going to stay in this house for 30 more years, it makes sense to refinance. Now, if you're not going to stay there for more than 5 years, there is a point in time where you need to look at this and go, it's not worth paying the $2,700. This video won't go into that analysis where that break even point is. This is more just to be aware of things to consider. All right, so now let's jump into the second example, which is what if I were to refinance, but I want to keep my payment and I'm comfortable with the payment right now of $869. So again, the refinance loan's $170, the rate doesn't change. The interest with this new modeling actually lands at $54,000 when you make extra payments. It just drops right to the bottom line. Same math problem on the bottom. It's just the interest remaining is much lower because you're making a higher payment. The nice thing about this is that you're not required to do it each month, but if you do, the net worth of that result actually gives you an incremental $24,000. So in my instance, if I make this analysis come true and I do a refinance on 30 years, I keep my payments the same, it would increase my net worth over 30 years by right around, call it $42,000. Well, hey, what if I change terms, which is one of the big things I wanted to do, which is take and refinance with a 10-year mortgage, which is actually a slightly better interest rate than the 30-year at 2.5, and that would mean that my actual interest over the next 10 years would result in $22,000, or it would actually be better than the original mortgage by $106,000. Huge. I was actually joking about making a clickbait on this video saying how I saved $100,000 overnight. But after I got through the discussions with the lender, it didn't make sense to go through the 10-year, and I'll get to that in a second. But the monthly payments increased to $1,600, which is a nearly $700 more a month that would have to be applied against a loan. And then you would obviously have to pay the refinancing costs of $2,700. So now if I do the net worth analysis on this, it's actually $172,000, which is merely $75,000 better in net worth than if I do nothing today. So one thing that you're going to notice under all of these circumstances is these are numbers on a page, and you actually have to really think about, I have to commit to something. If I do nothing, I save nothing from the current state. All right, so now let's say here's where I actually landed. This was my strategy going forward and for various reasons, which I'll talk about. So as we think about the original mortgage, and I'm just going to say I was comfortable at the 10-year. I'm going to apply extra payments against the house. And so again, the original mortgage or original loan is worth $185,000. The original rate's 3.8. Or just shy of 3.9. If I were to make extra payments to get me up to $1,600, which is the equivalent of the monthly payment of the 10-year, I only pay $66,000 in interest. And so it's a net savings of $61,000. I will not have any refinancing costs. I can leave everything as status quo. And then, so if I do the net worth analysis, I land at $160,000, which is $61,000 better than where I'm at today if I make this decision. Now, that is merely $15,000 worse than if I refinance over the 10-year. The problem is To me, I don't know that I'm going to be in this house for more than 5 years. So to me, the refinancing doesn't necessarily make sense to pay those costs and give the bank $2,700 if I'm only going to stay here for 5 years. But if I were to change my mind and keep it over the long term and rent the property, which you've noticed that I've done rental analysis on, at that point in time, I might do a refinance cash out where basically I take and I increase the loan to 80% of the value of the house and I cash it out um, for various deduction reasons against the rental income. Or I might just outright sell the house and not keep it at all. But either way, if I'm only going to be short term, which I think mine is only 2 to 3 years, is my outlook, I don't see the value in paying $2,700 because I'm not going to receive $2,700 in benefit over 2 to 3 years. So, with that being said, what I would recommend here is that you come in here and personalize this to yourself. This is just information to think about if you refinance, what do you need to consider? All right. Thank you for tuning in with me on this long-tailed discussion about refinancing. A lot of this information wasn't available for me right off the bat, and a lot of things I tried to research didn't cut right through to it and give me the information I was looking for. So hopefully this shed light on that. As always, the document is in the Discord link below, and if you want to come out on my finance podcasts on Twitch, the link is below as well. Those will be Sunday nights at 9 p.m. Central, and we can work together to customize this or any other document to you. As always, have a great rest of your day, and I'll talk to you later.